that we are fairly negative on the market, expecting 10,600 levels, and we did see a fantastic slide. But again, as you come close to this 10,600, that broad range support comes in. So, what you're seeing is really something which is a corrective move up, a corrective bounce, if I may put it that way, in my opinion. Technically, we are set up negatively, and what we're seeing is after an 8 or 9 day continuous down dipping pattern, we are taking a bit of a breather. So I would rate today's move up not as a breakout. And there are two very clear reasons why I'm not calling this a breakout. The Nifty really needs to get past 10,780, 10,800 on a close before we even think of a short-term breakout. Secondly, most of the index heavyweights, whether I look at a Reliance, whether I look at an HDFC Bank, the volumes are well below the average volumes it usually clocks, and probably the volumes are even equal, if not slightly lower than the last 2 or 3 trading days. So my worry is this is an up move with fairly under average volume. This is an up move that's not taken out a lot of key levels, which is why my stand would be closer to 10,780 to 10,800. Those are points where you should sell the Nifty. We think we will head to lower levels, break these lows and move closer to about 10,500. Another, to be more precise, 10,480 is the next support. So that's where we're probably heading to on the Nifty spot.
What about the Bank Nifty?
On the Bank Nifty too, our trajectory is negative, and again we've come to classic support. An ICICI Bank 335 to 340, very strong support. An SBI 260, very strong support. So this is what's giving the market, or rather the index, the Bank Nifty, its support. So we're at key support levels after a 7 or 8 down dip kind of session that we've seen. So all in all, 26,600 is where I peg the next target for the Bank Nifty. 27,100 being the key resistance. So I'll keep a stop loss above that and maintain my short stand.
Our stock calls are a buy call on Apollo Tyre, and you're selling Maruti.
Absolutely. We had a target last week of 6,800 on Maruti, which is already achieved, and we've kind of moved that target down to 6,520. We think that's the next short-term move you would see on Maruti. So 7,040 being a stop loss, I would sell Maruti. We're also bearish on Hero Motor, which is also declining. On the flip side, we like Apollo Tyres, and clearly because of the kind of volume breakout that we've seen here, we think short-term we will over the next 3 to 4 sessions see levels closer to 215 to 20 on this. So with the stop loss of 203, one could be looking at buying Apollo Tyres.
Wow. Let's wait and watch. Some of the auto ancillary companies today have done rather well for themselves. It's spread across. Minda is a case in point. Some of the tire companies are a case in point. So they have done okay for themselves. This morning we were talking about some of the upstream names, the likes of ONGC, etc. have done rather well for themselves. So good going. Let's see if this momentum lasts. All eyes, or rather one eye, definitely on what's happening to the Chinese yuan and the whole US-China trade conversation too. So keep that at the back of your mind. Just before we get to Mayuresh Joshi, want to pull up the European scene and what the European markets are doing right now before we get to a fundamental voice of Mayuresh Joshi. Just pull up FTSE CAC DAX and let's see what's happening at that end of the market. Well, some bit of green, not a lot, but some bit of green certainly being seen out there. 140 odd points now for the Nifty 50. Somehow can't take our eyes off that. Mayuresh Joshi joins us on that note. Mayuresh, good having you. Thanks so much for joining in. If you are a bull, then it's great news. If you are a bear, then would you believe this is a part of short covering? And what about the companies which are leading it? Today we see a lot of commodity names which are right up there, be it the metal names like Vedanta, Tata Steel and Hindalco, or companies like ONGC, HPCL, etc.
So afternoon, Neeraj. No, I think it's certainly a respite after what you've probably seen over the last 7 to 8 days. So to that bit, whether it's short covering, I think the data points at the end of the trading session will let us know. But again, a large element in terms of how the market moves have largely been, I think a lot of stocks within the broader universe have corrected quite significantly. And this is where you need to probably place yourself over the next 2 to 3 months. If there is continued volatility in the market, which a lot of participants feel, I think a few of the sectors should do well. So I think consumption is loosely defined as one sector which will do well. But within this, again, I think a few of the cement stroke infrastructure oriented stock, a few of the IT companies, a few of the capital-oriented companies which have probably reflected better numbers and have less leverage on their balance sheets. And a few of the NBFCs stroke financials, I think this is where our positioning is. So you might obviously see such bounce backs happening in possibly leveraged names as well, in high beta names. But whether they last, considering market volatility, is a different question altogether. So I think investing in quality in any dip that you probably get over the next few days, weeks, I think is the better opportunity and a strategy going forward.
Okay. Well, clutch of names moving around. For example, in today's session, if we look at the broader end of the spectrum, then companies like Tejas Networks, for example, have done remarkably well for themselves. Big move today, big move over yesterday and today, by the way. Today up about 20%. Yesterday was doing reasonably okay for itself. So that's one counter that you got to watch out for. We already spoke about Indocount having a good day. Minda Industries up a good day as well. So some bounce back being seen here. Mayuresh, any thoughts on any of these bounce back names?
So Minda is interesting within the auto ang space, and again I think the diversification that they've probably done over a period of time and the kind of investments that they're making in terms of the future product line, I think it's very, very interesting, and numbers have probably held up. So when you talk about the top line growth, how their margins have panned out, seem to be very interesting. So yes, I think Minda probably looks interesting from a medium to long term perspective. Obviously I think the slowdown that you're probably feeling and sensing in the market, I think that probably should reverse at some point of time, and as normalization starts happening, quality companies like Minda should hold out. So I think if anybody's holding on to Minda, clearly they should hold on.
Well, it's certainly rocking the charts right now. Minda Industries, let's wait and watch if this continues. But it's a good time to get a sense of what dealing rooms are recommending in this session today. The conversations, the nature of the conversation might be slightly different than what we've seen the last few days. Darshan and Yatin are here with their channel checks. Good afternoon, both of you. Darshan, let's start with you first.
Yeah, so one of the stocks that's been spoken about is Apollo Hospitals. Remember now, this stock has been in the eye of the storm given the fact that the promoter pledge did manage to increase and the stock did manage to fall. Dealers indicate that majority of the pledge-based selling may be finally over on the counter. It's managing to stabilize in today's trade. The other counter, which has fallen significantly, it's down almost 2%. The last time I checked, it's almost 4% down, is Jubilant Foodwork. Dealing rooms do indicate there's a potential block deal that could happen in the next few days. The promoters may be looking to offload some bit of stake. That's the news that we've heard. And on the back of that, there is selling pressure that's been seen. And Lupin is actually managing to stay flat. It was down in trade, but some of the domestic mutual funds did highlight that there were sell flows in the counter. So that's what dealers have indicated. But Yatin?
Well, Indigo, that is one stock at the day's high, but dealers do believe that aviation stocks is something one should keep away from. Crude prices are rising, and on the back of that, plus the aviation data which has come out indicating slowing growth, dealers do recommend that Indigo is something wherein there could be weakness after the rally that we saw today. Apart from that, TCS is also one stock wherein dealers indicate that domestic funds are buyers in trade. Remember, the stock went down intraday and has managed to bounce back quite sharply. More importantly, recent correction of around 6 to 7% makes probable buy sense on the domestic fund flow side. And finally, Vedanta, that is one stock wherein dealers are recommending a buy today, sell tomorrow kind of a strategy. Metal stocks in general are showing strength, and Vedanta is one stock wherein dealers, on the basis of F&O trends, recommend a BTST.
All right, Yatin, thanks a lot for that. That's what dealing rooms are recommending this afternoon. Mayuresh Joshi, lots been happening in the aviation space, and while we are taking a look at Jet on one side, the January data has come in slightly on the lower side at 9.1%, which is actually quite low in multiple months. What does it indicate for the industry as a whole?
So I think two things, Devina. One, I think the kind of numbers that